understanding the fear greed cycle, it's important to, for investors that you have to maintain your discipline. You have to avoid making emotionally driven decisions. And if you can recognize these psychological tendencies, investors, you can maintain a rational approach to investing when you focus on your long-term goals rather than short-term fluctuations in the market. And I have seen people gotten a little better with this just because they've been exposed to some of these market fluctuations, whether it was a crash during COVID or even 2008, 2009. And people, some people went through that fear cycle and sold everything in 2008, 2009 during the financial crisis, only to see the markets come back shortly after. And shortly can be a relative term. I guess when you look at COVID and you see that there was a big crash in March of 2020, and a couple of months later, the markets had already recovered almost the entire amount that they had crashed. So people are starting to learn kind of how these markets operate. And yes, there can be downturns, there can be crashes, but also there's still a lot of people that kind of take that fear side and take it to extremes. And then I see it a lot more on the greed side, where markets are making new highs or stocks are making new highs, and you kind of think, okay, there's no way that this can ever go back down. It's only going to go one direction and go up. And in reality, it's not always true.